Seller financing real estate investing is one of the most common ways to buy properties with little or no down payment. Seller financing is one of the oldest creative financing options in real estate, and it continues going strong over the years, especially when the credit market tightens. Seller financing is a great option when you don't have access to more traditional lending methods, such as conventional mortgages or FHA loans. It comes with other important advantages as well, as it makes real estate transactions faster and more straightforward, minimizes the amount of paperwork, and increases the lending profit margins. However, just as everything else in real estate investing, seller financing can be successfully implemented only if you know how to do it. Hey, my name is Greg, and today I'm going to talk about seller financing real estate investing. I'll walk you through the pros and cons of this strategy, as well as the factors you want to look out for before getting started. First things first, what does seller financing mean? Seller financing real estate investing is a strategy that allows the buyer to settle the payment to the seller directly in monthly payments instead of taking out a traditional loan from the bank or another lending institution. From the perspective of property buyers, a seller financing contract works similarly to a conventional mortgage, but it eliminates the middleman by allowing the homeowner, rather than a traditional lender, to own and manage the credit. As a real estate investor, if you want to give seller financing a go, the seller will provide you with the finances you need and process the mortgage. You will then make monthly payments to them instead of corporate lenders. So, how do seller financing real estate deals exactly work? In a seller financing real estate transaction, the seller and the buyer reach an agreement and make their own arrangements regarding the payments. They create a promissory note that specifies the interest rate and the payment plan, as well as the repercussions in case the buyer fails to meet the commitments. Unlike with a mortgage loan, there's no transfer of the principal from the buyer to the seller. Instead, the buyer and the seller arrange to repay the amount over time. Buying a rental property with seller financing could be faster than traditional methods because there are only two participants involved. Buyers can typically acquire a property for less money because they don't have to depend on a mortgage loan office, an appraiser, and a financial institution. So let's take a look at the advantages and disadvantages of seller financing real estate investing from the buyer's perspective. Let's start with the pros. Seller financing real estate provides the buyer with additional capital to bridge any financial shortfalls. Moreover, a seller may be able to provide more favorable terms than a bank. Seller financing is frequently arranged as a quick loan between 3 to 7 years, alongside longer-term installments, 10 to 20 years, and a balloon payment at the maturity period. The monthly payments expected from the buyer can be pushed down to a very reasonable level, allowing the buyer to use the cash flow from the investment property to make these payments as well as to pay the other rental property expenses. Importantly, for beginner real estate investors, the paperwork required for seller financing transactions is generally less complicated than what is required for a bank loan. In addition, the seller has a keen interest in the performance of the investment property so that all payments can be made on time. As a result, the seller will be much more ready to provide additional advice and help at no cost at any point in the future. Now, let's take a look at the cons of seller financing real estate investing. The seller has a stake in the rental business' long-term success. This could be a disadvantage if the seller is overbearing and does not appreciate the independence of the buyer. Furthermore, suppose you as the buyer default on installments to the seller. In this case, the seller may be more willing than a typical lender to expedite the debt and attempt to reclaim the property. While a bank might find it difficult to manage a rental property, an individual seller would not mind having back his or her property. The seller will almost certainly demand that the new property owner personally guarantees the transaction. Last but not least, the research and analysis is meant to be simple and quick, single-handedly conducted by the buyer. However, in some cases, sellers turn out to be overbearing, conducting additional research on the buyer's financial standing and their capacity to run a rental property. Seller financial real estate deals come with benefits and drawbacks from the seller's perspective too. Let's look at the pros. The loan yields interest for the seller, so they are making more money than if selling all in cash. If the seller can classify the loan as an installment loan, they will save money on taxable income. In addition, sellers who offer owner financing benefit from a larger number of interested buyers who don't qualify for a conventional mortgage. Another advantage is that when the seller provides the financing, the transaction is usually completed faster. Lastly, during the transition period, the seller retains some ownership in the real estate property. Meanwhile, the cons comprise of the following. There is a higher level of risk associated with a seller financing real estate deal from the viewpoint of the seller. There are repercussions for the seller if the buyer defaults on payments. The seller remains connected to the property for longer and depends on the performance of the property as a rental. This is not a good strategy for people who don't want to depend on the real estate market. The seller does not get all his or her money right away. So in case you plan to invest your money in another property or to buy a home or anything else, this is not a recommended way to sell your real estate property. So all in all, why should you consider seller financing real estate investing? Do the pros outweigh the cons? It's essential to remember that despite the important possible advantages, seller financing real estate is not necessarily the best strategy at all times. While you save money on closing fees and other costs, whether this makes financial sense for you depends entirely on the conditions that you are able to negotiate with the seller. So, before jumping into a seller financing real estate deal, you have to calculate all the numbers, evaluate the pros and cons, and rely on solid data and analytics to make the best investment decision. Remember that good real estate investing decisions are based on extensive data, calculations, and analysis. In theory, every person with poor credit history can buy a real estate property through seller financing, provided that the seller agrees, of course. But the truth of the matter is that the seller will conduct diligent research on your credit past, financial situation, and rental business plans to assure that you will be able to make payments month after month. After all, the ideal scenario for the seller is one where you make your payments until you become the official property owner. So, what do you think? Is seller refinancing the right real estate investing strategy for you? If so, you are probably wondering where you can find properties offering owner financing. In general, properties for sale with seller refinancing are available in the same places as other properties. You can check out local newspapers, real estate websites, talk to a real estate agent, or ask around. The good thing is that most listings specify if seller financing is available. If you're looking for an owner financed property as a real estate investor, you can check out the Mashvisor website. In addition to getting access to all the standard property information, you will get detailed investment property analysis, which shows you exactly how much cash flow and profit you can expect to generate on a property by renting it out on a long-term or short-term basis. This will save you lots of time on analyzing the investment potential of the property and let you move quickly before another buyer snatches the deal. So guys, this is everything you need to know about seller financing real estate investing before you can get started. What are your thoughts on this real estate strategy? Do you have any tips for beginners? Please let us know in the comment section below. If you enjoyed today's video, remember to give it a big thumbs up and don't forget to subscribe to our channel. We'll see you next time.